ICICI Bank, campus and off-campus interview preparation. Welcome back to the channel. Today we're diving into one of the most important preparation guides for ICICI Bank campus and off-campus interviews. These may be expected questions, which are gathered using web search and our personal database. So you can use this as a preparation material, but our suggestion is to go with other topics as well from channel playlist. You can check timestamps and decryption for questions and jump to a particular questions as well. And how would you explain the functioning of a universal bank like ICICI Bank to a client who has no finance background? Sample answer. I would explain a universal bank in very simple terms. I would tell the client that a universal bank is like a single financial supermarket. Instead of going to one place for an account, another place for a loan, and a third place for insurance, a universal bank gives everything under one roof. This helps the customer because all their needs are handled by one trusted institution. And it helps the bank because it understands the customer better and can offer more personalized solutions. Key points. One-stop solution for all financial needs. Helps build deeper customer relationships, simplifies access, and improves convenience. Off. What KPIs would you track to evaluate the profitability of a retail banking portfolio? Sample answer. To evaluate profitability, I would track metrics that show revenue strength, cost efficiency, and risk quality. Net interest margin tells me whether the bank is earning enough spread. Fee income per customer shows cross-sell and customer engagement. Cost of funds helps me understand pricing pressure, and risk cost, especially movement in NPAs, tells me whether this profitability is sustainable or not. Key points. Net interest margin, fee income, cost of funds, risk cost, and NPA trend. The bank's CASA ratio dropped significantly in one quarter. What issues would you investigate? Sample answer. I would begin by checking whether any large corporate clients withdrew funds, because bulk outflows can distort one quarter. Then I would check if branches are facing customer satisfaction issues or long turnaround times. I would also look at competitor actions, for example, aggressive interest rates or new digital products. A CASA drop usually means customer engagement or market competitiveness has weakened, so we must identify the root cause quickly. Key points. Investigate bulk withdrawals, check customer engagement gaps, evaluate competitor pricing, identify operational bottlenecks. How does a bank balance between interest income and fee-based income? Sample answer. A bank tries to keep both income streams healthy because they behave differently. Interest income is stable, but depends heavily on market interest rates and credit quality. Fee income is flexible and less sensitive to interest rate cycles. So the bank designs its products, pricing, and RM incentives in a way that encourages both loan growth and cross-selling of fee products like cards, insurance, and wealth products. Key points. Interest income gives stability. Fee income reduces dependence on spreads. Balanced product strategy is essential. What are the key risks a private sector bank faces when expanding its retail loan book? Sample answer. The biggest risk is credit dilution, because fast growth sometimes leads to relaxed underwriting. Another risk is operational errors due to high volume and pressure on teams. Fraud risk also increases when onboarding speed is high. To manage this, the bank strengthens digital verification, scoring models, and post-disbursement monitoring. Key points: credit dilution, operational lapses, fraud risk, need for stronger monitoring. How would you prepare and review the financial statements of a large bank under IND AS? Sample answer. I begin by reconciling GL balances with CBS reports to ensure accuracy. Then I review whether the classification of advances, deposits, and investments follows IND AS requirements. Special focus areas include ECL provisioning under IND AS 109, fair valuation of investments, and interest income recognition. Finally, I review all disclosures to ensure they are complete and consistent. Key points: GL/CBS reconciliation, IND AS 109 focus, fair valuation and disclosures. How do expected credit loss provisions under IND AS 109 impact profitability? Sample answer: expected credit loss provisions are forward-looking, which means the bank must estimate future defaults and not just rely on past NPAs. Because of this, provisions are recognized earlier, leading to a reduction in short-term profit. But the long-term benefit is a stronger balance sheet and more stable credit quality. Key points: forward-looking provisioning, early profit impact, long-term stability. If you find discrepancies between GL balances and the core banking system, how would you handle it? Sample answer: first, I would check if it's a timing difference, such as pending batch jobs or unposted entries. Then, I would trace sample transactions to see where the mismatch started. If the issue is system-related, I would involve IT and the finance team. Material differences must be escalated immediately, because financial reporting depends heavily on GL accuracy. Key points: identify timing versus system issue, trace transactions, escalate material gaps. How would you audit interest income recognition in a bank? Sample answer: I start by checking the interest rate master to ensure correct rates are applied. Then I recompute interest for a sample of accounts and compare it with system calculations. I verify that interest is reverse for NPAs as per regulations. I also check whether accruals follow IND AS norms. These steps ensure both accuracy and compliance. Key points: verify rate master, recompute samples, check NPA interest reversal. End. What's your approach to validating asset classification and provisioning schedules for regulatory audit? Sample answer: I review overdue aging to confirm whether accounts should be classified as SMA or NPA. Then, I verify collateral valuation reports and ensure they are updated. I recompute provisions based on RBI norms. For doubtful assets, provisioning must match the correct percentage based on the period of default. Key points: review aging, validate collateral, recalculate provisions. How do you assess the creditworthiness of a corporate borrower with volatile cash flows? Sample answer: I focus on understanding the cash flow pattern across cycles, whether the borrower has liquidity buffers, and how strong the promoter support is. I run sensitivity analysis, like assuming a 10% drop in revenue, to check if repayment capacity remains intact. This helps me judge whether the business can handle stress periods. Key points: cash flow analysis, liquidity review, scenario testing. End. A high-value corporate account shows early signs of default. What proactive steps should the bank take? Sample answer: the first step is early engagement, meeting the client to understand what's causing stress. I would review stock statements, receivable aging, GST data, and bank statements to check whether cash flow issues are temporary or structural. If the business is viable, I would explore restructuring options under regulatory frameworks. The goal is to prevent slippage. Key points: engage early, review cash flow data, evaluate restructuring feasibility. Explain how banks use stress testing and scenario analysis to manage risk. Sample answer: banks create scenarios such as a rise in interest rates, a slowdown in sales, or a spike in NPAs. Then they test how the loan portfolio or liquidity position would behave under these scenarios. This helps the bank identify vulnerable sectors and plan capital and liquidity buffers well in advance. Key points: Scenario-based analysis. Identify weak segments. Supports capital planning. How would you evaluate operational risk arising from a new digital banking product launch? Improved, interview-friendly version of the question. When a bank introduces a new digital product, how would you evaluate the operational risks involved? Sample answer. I start by mapping the end-to-end process from customer onboarding to transaction processing. Then I identify potential failure points, such as authentication errors, server downtime, or data leakage. I review maker-checker controls, cybersecurity safeguards, and the robustness of customer support. Finally, I assess whether the product has adequate monitoring dashboards and audit trails. Key points: map process flow, identify failure points, review controls and cyber risks. What are early warning signals in credit monitoring and how should they be escalated? Sample answer. Early warning signals include repeated check returns, delays in submitting stock statements, declining sales, GST mismatch, or sudden rise in outstanding. When any of these appear, the RM must escalate it to the credit team, conduct a site visit if needed, and take corrective action before the account deteriorates. Key points: check returns, information delays, sales decline, immediate escalation. What audit procedures would you perform on a branch that shows unusually high NPA levels? Sample answer. When a branch shows abnormally high NPAs, I would begin by reviewing the loan files in detail. I check whether sanction conditions were followed, whether documentation is complete, and whether end-use verification was conducted. I then verify overdue aging, collateral valuations, and whether interest was reversed properly. Finally, I assess the recovery efforts made by the branch and evaluate whether the NPA recognition process was timely or delayed. Key points: review loan files and documentation, verify overdue aging, check collateral valuation, validate interest reversal and recovery actions. During an audit, you discover willful overrides in loan sanctioning. What steps would you take? Sample answer. Willful overrides are serious because they bypass the bank's credit policy. I would first document the finding with evidence. Then, I would check whether the override was approved at any level or done informally. I would assess whether the override led to any credit exposure or potential loss. After this, I would escalate it to the audit head and recommend strict follow-up actions. The goal is to protect the bank and prevent recurrence. Key points: document evidence, check approval trail, assess credit exposure, escalate immediately. How do you evaluate the strength of internal controls in treasury operations? Improved question framing. How would you check whether the Treasury Department is following strong internal controls? Sample answer. Treasury requires strict segregation of duties, so I start by checking whether front office, mid-office, and back-office roles are clearly separated. Then I review deal tickets, confirmations, and valuation reports. I verify whether limit monitoring is active, such as stop-loss limits, dealer limits, and counterparty exposure limits. I also look at whether reconciliations and settlements are happening daily. This gives a complete picture of control strength. Key points: segregation of duties, deal and confirmation checks, limit monitoring, daily reconciliation. End. Which areas of regulatory compliance are most vulnerable in retail banking operations? Sample answer. Retail banking deals with high customer volume, so the most vulnerable areas are KYC lapses, AML monitoring gaps, mis-selling of products, and incorrect charges. These areas attract customer complaints and regulatory penalties. Strong monitoring and periodic audits help reduce these risks. Key points: KYC and AML, mis-selling, incorrect charges, high-volume risk areas. How would you design an audit plan for evaluating ATM operations across multiple clusters? Sample answer. I would begin by understanding the ATM network structure and cash replenishment process. Then, I would prepare checklists for cash reconciliation, CCTV coverage, machine uptime, and vendor responsibilities. I would also sample ATMs based on risk. For example, isolated ATMs, high cash ATMs, or ATMs with frequent complaints. Finally, I would test physical security and reconcile reports with the head office. Key points: understand cash process, create risk-based sampling, review uptime and security, vendor monitoring. How would you examine GST implications on cross-selling of financial products? Sample answer: I would identify whether the bank is acting as a principal or an intermediary in the transaction. If the bank earns commission from insurance or mutual fund distribution, GST may apply on the commission. I review agreements, product structures, and revenue sharing models. I also check whether GST credits and reversals are handled correctly. This ensures the bank avoids penalties. Key points: understand role, principal versus intermediary. Check commission income, review agreements, verify GST treatment. A client disputes TDS deductions on interest payments. How would you resolve it? Sample answer: first, I would explain the rule clearly to the client, including threshold limits and applicable sections. Then I would verify whether the TDS was deducted correctly based on PAN availability and applicable rate. If there is an error, I would guide the client on correction procedures. If deduction is correct, I would help them understand how it will reflect in Form 26AS. The key is handling the client patiently. Key points: explain rule and threshold, verify TDS computation, guide on corrections, help check Form 26AS. End. What are the major tax considerations for provisioning bad debts and NPAs? Sample answer: under tax rules, the deduction for provisions is limited. Banks must follow specific guidelines for claiming deduction on NPAs and write-offs. I would evaluate whether the provision is in line with RBI norms, whether it's specifically identifiable, and whether write-off entries are properly passed as full debit and credit entries. Compliance ensures the bank avoids disallowance. Key points: limited tax deduction, align with RBI norms, specific identification, proper write-off entries. How do you ensure compliance with transfer pricing rules for overseas banking subsidiaries? Sample answer: I check whether all cross-border transactions, such as guarantees, remittances, or service fees, follow arm's-length pricing. Then I review documentation like benchmarking reports and intercompany agreements. I also verify whether the bank has maintained master files and local files as required. This helps the bank reduce international tax risk. Key points: arm's-length pricing, benchmarking, documentation, reduce international tax risk. Sentence: what tax risks should a bank evaluate when restructuring loan portfolios? Sample answer: banks should evaluate whether restructuring leads to modification in interest recognition, changes in security valuation, or timing differences in income recognition. Some restructuring arrangements can trigger tax implications if interest is waived or rescheduled. It is important to document everything clearly and consult tax guidance. Key points: impact on interest, impact on security value, timing differences, clear documentation. How would you analyze the liquidity position of a bank using ALM reports? Sample answer: I begin by reviewing maturity buckets of assets and liabilities. I check cumulative mismatches, especially in the 1 to 30-day bucket. I also review the liquidity coverage ratio and dependence on volatile liabilities. If short-term liabilities exceed liquid assets, liquidity risk increases. This shows whether the bank can survive a stress situation. Key points: maturity buckets, mismatch analysis, LCR, stability of liabilities. End. How is interest rate risk managed in a bank's treasury operations? Sample answer. Interest rate risk is managed mainly through duration management and hedging strategies. Treasury teams adjust the duration of investments depending on rate expectations. They may also use derivatives to hedge exposure. The ALM committee monitors interest rate sensitivity and ensures compliance with limits. Key points: duration strategy, hedging, ALM oversight. If bond yields suddenly increase, how does it impact the bank's investment book? Sample answer. When yields rise, bond prices fall. This creates mark-to-market losses in the AFS and HFT categories. It can temporarily reduce profitability and impact capital adequacy. Banks usually review duration and hedge positions to reduce the impact. Key points: bond prices fall, NTM losses, capital impact. What parameters would you review before approving a large project finance loan? Sample answer. I would assess project viability, cash flow projections, and the debt service coverage ratio. I also check promoter contribution, regulatory approvals, and sensitivity scenarios. The goal is to ensure the project can generate stable cash flows to repay the loan. Key points: DSCR, promoter equity, approvals, sensitivity analysis. How does a bank optimize capital allocation under Basel III norms? Sample answer. A bank optimizes capital by reducing risk-weighted assets, improving asset quality, and increasing non-interest income. When underwriting becomes stronger, capital consumption reduces. The bank also reviews portfolio concentration and moves towards lower-risk assets to maintain healthy ratios. Key points: reduce RWAs, improve asset quality, increase fee income, balance portfolio risk. Thank you for watching, and if you liked our video, kindly press the like button and leave us a comment. This will help us reach a wider audience.